Hey everyone, welcome to your daily update for SOL and BTC. It's kind of whale games time at the moment, so we've just finished the New York session. Their little algos went pretty mad trying to push the price down just before 8 p.m. in UTC. And now we are looking to see how these whales are going to try and position the price for the closes today. So got some pretty key levels. So yesterday with the core level really that we were looking for was that 204 level. And they basically spent all day up above making things look really bullish, sweeping that level and completing some of the targets like the 5-day target, stuff like that, they all got hit. And then of course, as you get close to the end of the day, what happens? The price pulls back down. And why does it pull back down? Because it started under the resistance. So if you're gonna position price to have a sustainable move up, you don't position it under resistance and then immediately push up into the new day. That's the kind of thing that's just really trappy. Whereas what you would do is you position over the top of the resistance and then use it as support and then try to come up and hit the next level. So given that we've hit those upper levels but then retrace back down below, really it comes down to today as to whether or not they push the price back up above the levels and open the new candles across all the various timeframes, or whether or not they stay below the level, in which case you might as well expect some more downside. So looking at liquidity, it really could go either way, but it is more positioned to take the lower liquidity just because there's on things like SOL, there's this gap to the upside here where people aren't filling up the space yet with new shorts on the daily. We still haven't hit that 208 level, and just something new that I'm working on to do with how ranges get created and how you measure the top of a new range and how they expand out of one range into another. Just a little thing would be that we don't. So say for example we do not close over 208 for the month, but then next month we close over about 237 on SOL. That would allow them to expand the range, and if the theory is correct, which I've back tested on the weekly and on the monthly, I've managed to get it right 3 times on the monthly, but there isn't really that many monthly ranges, and managed to get it right about 5 times out of 6 on the weekly. So if they do that, then there is a really good chance that we see some huge pump coming. But at the moment, you just have to look at the charts, and the charts just say bearish. There is a 5-day move in play down to this 194 level, so that's probably going to take all of that at some point within the next couple of days, I'd say. If it doesn't happen very, very soon, maybe before you've even seen the video, just based on the way it's dropping. And yeah, I guess when it comes to these moves, we've got. I was just showing in the Discord earlier today that we've got swing moves to 112, and we've got swing moves to 214, and you don't really know which way it's going to go. But what you do know is that it won't go there if there isn't liquidity. So it's almost the opposite of sentiment. If everybody gets bullish, it will probably go down, because when people get bullish, they long, and when they long, particularly if they long on high leverage, it creates the thing that allows the move to play out so that it can be opened into it. So looking at the 1-day liquidity, BTC really, it could go up or down. It's smack in the middle. So you're looking at 118 to the upside, or you could go 112. I think there is some pretty key stuff about 112, but by the time you get to 112, like we've said previously, it depends what it does when it gets there. If it gets there and it stays there, it'll build below it. If it looks like it's going to be a little bit bullish and it gets there and then people start to open longs, then it could go down again. So liquidity just as a form of trading is pretty pointless, but it does sort of give you an idea that it's easier to go down at the moment on SOL than it would be to go up economically, and BTC could literally go either way. So if we look, it's also kind of a good judge of sentiment. If we look at the 7-day, sentiment is that it's really bullish, super cycle, blah, 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 everything's going up. Okay, so it probably won't. It's probably going to come down here and at least take some of this, and then maybe it goes up. But you see the same key level exists on SOL at 208, which sort of says to me that there's not a lot of point in them going above 208 on the 7-day. Likewise, there's not a lot of point in them going above 118. So on BTC, so it's more worthwhile to go down. And it's not really till you get to the 30-day where there's still a reasonable amount of shorts open, but those shorts are now starting to balance out with longs, and the same on SOL. So if they were to dip down, take liquidity on either side, then they would have an equivalent amount of shorts to pump up into, and it would be bearish if they just pushed up into those shorts and then wicked all the way back down again, because that would kind of imply that the top is in. But yeah, that's all the liquidity is showing us at the moment. And if we look at it on the short term, just with what's happening right now, you see they've pushed down, but they've left this 100x leverage up there, so they're probably going to go back up and take that. It would just, if it's going to happen, it's going to happen after they bridge the gap, because they're not going to want to spend their own money to try and actually push the price up there. They'll want to use people's liquidations and stop losses to be able to cascade the price. So it's at the moment, if we come down here and we look bearish for a long time and then you get a wick up there, then don't be surprised. And same thing goes on SOL, 203 plus, but to really start to get more high time frame bullish on SOL, we need to start closing over that 204 level, that 204.6. If we're not going to close over that, then it's just going to become big resistance, and it was big resistance historically, and we've spent a long time trying to get over that. And when we do get over that, we tend to have a nice pop to the upside, but yeah, at the moment, can't really be completely bullish on something if it can't get over a resistance level. Okay, let's have a look at these charts. So SOLBTC Strength, on the daily, it's as you saw, it closed under trend yesterday. It's pushed up through the trend, and that's kind of why I was saying it's a bit trappy. It's almost instantaneously when we closed the candle yesterday, we started to rally, and that allowed them to go up there and make people feel really bullish and open up a whole bunch of longs because they think it's going to go to the moon. The influencers started posting super cycle videos and so on and so forth, and then hey, guess what happens? It comes back down before the end of the day, and that's how price action works when it comes to the psychology of it. So the candle is just noise. What happens and how it closes will tell you what can happen, but during the period of the candle, it's just noise. So if we close under here again today, we could actually do exactly the same thing, because we are sort of compressing in between these trends. And the key thing we've got to watch out for is whether or not we fail to accumulate on any given day back to the 17671. So one of the guys in the Discord this morning was just asking specifics in regards to origin levels and rejection levels. So they get created on high time frame failed accumulation. So this break level, which is here now at 17671, it's been hit. It's rejected. This is why we say you would, if this was something you were trading, this is why we say you would take a TP at a break level. Now, how does a break level become a higher time frame resistance level? It's failed accumulation. So if in the next day or so we do not get back to this level and we don't touch it, and we can still go and hit that. We can hit that for 7 days in a row and it doesn't change anything. But if we go back at some point and we don't hit it, then it changes that and it becomes a more polarized level because the break level got tapped. And you should always expect some kind of rejection or retracement, either off a break level or to a break level if you go above it. But it's when you don't go back to it that it changes. So we've gone up from the opposite side of the trend, we've pulled back down. If over the next coming days we don't touch it again, the next time we touch it, chances are it'll give a bigger rejection, and then that will be a weakness for SOL compared to BTC. And then also, by the way, at any time in the future, if we then close over it, it will explode because it becomes a polarized level and it will shoot up to the upside. So that's pretty much where we are with that. If the whales are just trying to get people to capitulate, then what's going to happen is that this candle is going to come back up before the end of the day. It'll probably open on the top side of the trend, and then it can use that to bounce. And then, hey, guess what? We're going to go back to that 204 level again on SOL and try to target that. So that's basically where we are with that. And the weekly is still okay. We opened kind of on the trend. We haven't actually hit the other trend on the weekly yet, but we've got a long time to go. So that can stuff around for a bit before it really tells us anything new. Okay, let's look at these safety assets. So on the daily, if we want to see a alt run again, another little pump for altcoins, what we want is we want this candle here to basically keep on moving down. Now we have hit the break level at the bottom of the range. So it's kind of the opposite of what we just said about SOLBTC. If tomorrow we don't hit this break level again, then it converts that to support. And then the next time we touch it, we can have a bit of a pump and probably break these trends. So the risk that money flow is heading back into stables and safety assets, and the risk that things like SOL is going to become very weak in the next day or so is quite high. So it's really a good idea to keep an eye on this for tomorrow's close, see how it closes, and then after that, it doesn't mean you can't have a rally, it just means it'll be a trap, because if SOL was to have a rally and this comes down after it fails to get to this level, then when it does hit this level, it will punch back in the other direction pretty quickly. So that's what this is telling us. We're going to get a new array of trend in here, so it'll be something like this. And the good news is that if we open under that trend, we should be able to reject off it, and that's positive, obviously, for alts. So if they bring this back up and they open on top, which means sort of getting back to anywhere from about 66.63 is probably going to open on the opposite side of the new trend. Little wick equals able to get over top of it, and a big wick like this means stuck underneath it. So that's pretty much where that's at. And as you can see, we're sort of leading into something, which is this lovely little wedge that we're kind of trapped in, or going to be a little bit more trapped in after today, unless that either pushes up or pushes down. Now, of course, if this actually just has some kind of magical huge pullback and closes underneath this trend in the next few hours, then we could bounce off the backside of that trend and then just keep on heading down. So that would be very, very bullish for altcoins in general. Okay, let's just see what the weekly was up to. So the weekly is still under trend. So this could push up as high as it wants really over the next 6 days. This 68.47 is resistance, so it could come all the way up to there even, and you could see a big pullback in alts, and then suddenly it could touch that level, reject back the other way, and you'd be wishing you'd bought that local bottom on the altcoins. But we've got the range trend down here on the weekly at 65.39. So, and we've got another trend, a prior broken trend that it's recovered here at about 65.76. So it could just play around in this area throughout the week with things going up and down, up and down, up and down. But it's not in a position to break any trends on this candle anyway. Okay, let's have a look at these totals. So what we saw yesterday on totals was we saw the trend move to the top side, the candle pull down, therefore the resistance was above. We opened the candle below the horizontal resistance level there, which was about that 155, and then we came down, we tested the level we closed above, which was the 153 support, and we pushed all the way through the trend, because that's what you can do with trends. But if you've got your trends done properly, and this is why my pet hate is trends, because it is hard to do trends properly, but if you do them properly, this is just a trap. It was to send the price up, get everybody bullish, pull back down. Someone asked, the other day, could the price have gone all the way up here and closed? Yes, it can. I mean, at the end of the day, they can do whatever they want. Would it happen? Pretty unlikely. Normally what would happen if you start underneath a horizontal resistance and underneath a trend like this is you either just reject off it straight away and go down, or you create some kind of fake trap move to the upside and get everybody locked into longs and then pull back. And the pullback will usually come towards the end of the time of the candle. So in this case, it's a daily. It could go up there for 23.5 hours and then just start to pull back, in that last half hour. So that's where we're at. Now, for this to get bullish, it can be quite subtle because there's so many levels through here. It only really has to just sneak back up above that 1.54, and then you could have a horizontal level to try and break the trend. Obviously, if it did just push up and get above 1.55 before the end of the day, well, that is very bullish, and then it can target that 1.59 area. So that's pretty much what that is doing. And we're also going to get a there'll be probably a new array of the interior trend today for support. So overall, the total market cap for alts doesn't look too bad. It's just that they are in a position where they can reject, dump, come back up again. Things like this break level here at 1.53 haven't been hard closed, so until we get a proper accumulation candle on the daily above that level, they can just go down below it again. And we've also this area down here at 1.43, which is our high time frame support. It's quite a big air gap, between there and there. So capable of doing a pretty big sweep. You've also got some pretty sharp range trends in here that haven't been retested. And tomorrow, that range trend and that horizontal support crossover. So if they were to take an absolute nosedive tomorrow, it's just to hit this level down here and meet some obligations to do some retests, and it would be a great place probably to get an entry on alts because it would almost certainly bounce. It would probably recover all of these trends pretty quickly, and then it might hover around those. But if you got an entry down in this low area and it didn't recover these trends, because maybe it is going to go into a bear market, then you would be able to exit, on the close of the candle if it closed under the trend, and just be done with it, just say, hey, I'm going to close this position in profit because I can see now that they are trying to position it to be below the trend. So, but we'll keep an eye on this. We might get that last minute bullish pump and then off it goes, or they might even bring it all the way down back under this break level, or worst case under this horizontal level, because none of it is hard close. So if they push back down under that 1.52, then that's very bearish. Okay, so that's where that's at. What else we got? So many tabs open today because of all the time frames. So same thing in just the overall total. We haven't hit the break level to the upside. We're back inside the trend, but as you can see, we haven't hard closed the break level at the bottom side. We haven't hit the one to the upside, and we can easily open a candle on the opposite side of that trend just by pulling back, from where we are now at 3.82. Even just 3.81 is going to open the next one on the wrong side of that trend. So, but if we did pull back below 3.8, that's even more bearish. And if we close up for the day, then we have actually broken, hard closed the level. So that's bullish, and that's 3.83. So, we're talking about the difference between bearish and bullish on this is 3.8 to 3.83. 3.83 would still probably have a future rejection just because the wick would be too long on the top of the candle, but it's there's they're really making it hard to tell right now whether or not, and I think that's probably why that liquidity is smack in the middle, on things like BTC. Half the people out there think it's over, and the other half of the people think we're going to go into some forever cycle. But yeah, it's pretty hard to pick. And versus the DXY, it's rejected off the range trend, so and again, it's quite a trappy sweep. They swept up The key thing is how it closes. It's just always how it closes. If I could rant on about something forever, it's how it closes. And it closed under the horizontal resistance. It had a wick too long. It created a range trend. It did a trappy sweep, and it pulled back down. That is what it is, right? So it comes down to what happens now over the next day as to whether we hard close the break. Okay, let's have a look at BTC. I'll try to get through these time frames as quick as possible because there are heaps. Okay, so daily, it was trappy. You can see the trap is now played out. To be medium bullish, we need to close over this trend, so that's going to be 114.8 basically. To be properly bullish, we need to close over 115.6 on the daily, and then we still have a lot of resistance just sitting just above that in that 116 to 117 area. So it's still not out of the woods even if it closes up there. But and if we want to hard close this break level, this candle needs to be a yellow candle, which it's really close to being a yellow candle. It just needs to be over 114.492. So that's our daily. Okay. 2-day, rejecting off the break level. Failed to get back to the trend. It's pretty bearish in the scheme of things where it is. That means the next 2-day candle can't actually hard close the break level, even if it tries, because it's going to start from the wrong side of it. We're not getting any new support trend in here. We did recover a prior trend, which gives us confluence with that 112.5-ish, 112.8 area as a potential bounce area and a sweep of some of that liquidity. And we might hit that prior trend and then bounce back up again to test the break level or the other trend. Might be the reason they didn't touch it. They might want to come down first and then bounce up and then reject off it. But overall, it has to get above that 115.369 if it wants to even have a chance of getting above that break level. And then we've got origin resistance sitting there at 116.9. So super cycle's not here yet. Okay, 3-day. 3 days a little bit better. It's in the middle of nowhere, which is great. It's going to get some kind of topside trend today that it could reject off. It's miles away from its break level. It's miles away from its hold level. It's miles away from its origin resistance. So it's not too bad. The bull case would be that it pulls back to 112 point something. So you see how this confluence is starting to appear. The bull case is it pulls back to 112 point something and then takes a pump up. And it could take a pump all the way up to 120. So that's the bull case. The bear case is that nothing's hard closed. So it doesn't mean that that trend is actually going to act as support. That's the bear case, in which case, guess what? It keeps going down and comes back down to test any of these lower levels. And then it all comes about from there as to what happens next. If it closes under them, then we start talking about the videos going, hey, we're going to reject again. Hey, we're going to reject again. But that's our 3-day. Okay, looking at our 4-day, it might be recapturing a prior trend. It hasn't actually hit the resistance there at the 117.8 yet. It hasn't really hard closed much. It is creating this new sort of concept thing called an advanced hold level, which is starting about the wick of this candle. So that's 111.947. So we'll do a bit more in the future about how to trade these, but for now I'm still wrapping my head around them, so can't teach you if I haven't got it 100% right. So where could this pull back to? Well, we have horizontal supports, etc., all down here about that 110. We have the range trend coming down here at about the 110. We have high time frame support down here in the 108s. So we're back into those numbers again, really. We could pull it back into this stuff. And even just to retest the trend, is down in that 108 area again. So what else could it do? Absolute bull case is it could bounce 113.8 and it could head up here to 117s. Okay. Right. Rejecting off the backside of the trend on the 5-day. The 5-day moves have all pretty much played out now. If it can get above these trends before the end of the day, which means closing over that 116, then yep, bullish, and we're probably going to come up here and target the 119s. But if it closes under these trends, then it's most likely just going to reject and come back down to try and find a level at 113 or a level at 110 or 109 or just pretty much any of that. This is not this break here is not high time frame support, so you'd pretty much have to get down to 107,400 again if you actually wanted to start entering into some decent support on this. Okay, so the 6-day might create a hold level. It'll be a front side hold level. The trend will shift to the top side, so this would move to here. Okay, so this could give you a little push up into 115.9 or 116, maybe a sweep through it. Maybe we sweep through it, hit the 117.8, and then that would just be simply another trap to then actually pull back down to the hold level. Okay, and that would be down there at about 110.6. So, this is probably a tradable trade over the next wee while. It's just a case of it has to trigger. So it's going to be, does it trigger by going up first, then down, or does it go down first, then up? But there's some pretty key levels in there. There is also potential for range creation if it closes above this wick. Okay, so that's if it does close above 113.935, then we could get a bounce off that. And if it closes above 115.186.7, sorry, at that point we could get range creation. So we'll see on that one. Okay. This is in the middle of actually a rejection. So, this is where stuff starts to get bearish again. We need these lower time frames to continuously keep pushing the price up, because the higher time frames right now are basically set up to fail. So on the 10-day, we just can't have the price go much lower than it is now, because we really need it to open on the top side of the interior downtrend to have any real chance of actually continuing to move up. And if that happens, 118,900 would be your next rejection level, followed by the trend, followed by the prior broken trend retest in the 130s. Right, so this is okay close, but it's still under that interior trend. It hasn't broken it. We see sometimes these just keep going up until eventually they recover and then they bounce off it. So it's okay. But you've also got to keep in mind that this whole candle here hasn't performed its rejection back down to these lower levels yet. So that's also on the cards. So, okay. This is rejecting off a hold level. It's most likely going to come down. And that's so that higher time frame back to that 109,800 area. It's it's up inside the trend. The trend might stop at 111.5. It's underneath the other trend still. It's got resistance as well, like most of the other time frames at 118.5. It's once we start getting out of those lower time frames, a lot of the stuff is actually just showing that all it's trying to do right now is convince you to long, and there is potentially another dip. Okay, so this, on its last close, this failed to create a hold level. That was ultimately quite bearish, and you can see it's rejecting off the backside of the range trend. If it comes down much further, it's going to, say if it closes around 113.6, it can open on the wrong side of the trend, reject and travel down. So the actual downside plays in this have played out, so that's positive from that perspective. And if it was just to push up a little bit more and get above the range trend, or even just get a little bit further away from this interior trend, so 115s or 116s would be quite a positive close, but as it stands, you have to put that down as potentially bearish, and the targets are still sub 100k for these types of timeframes because they haven't retested their range trends. So at some point you're going to retest that range trend, and you'd rather do it now when it's at 98.5 than do it when the price is 300 and it's sitting down there at 93 or something else. Okay, looks like we'll probably could get a hold level on the 20-day. It's underneath the range trend. The last time we closed under this range trend, it was pretty bearish. Time before that, we closed under this range trend. It was pretty bearish. So could we? So that would mean rejection from about 116.395. We've already tested the hold. The next hold level is sub 100k. So really, it has to hold this break level, and if it drops below the 107s, it's probably going to really go down. If they push this down even just a fraction more before the end of the day, it's also going to open on the wrong side of that trend again, and it just means bigger chance of a dump. So what else we got? Eek. 25-day, it's just hovering on the prior broken trend. The next candle could open on the wrong side of it. It's underneath the Intera downtrend. It says it can go down. That's what that's saying. It might bounce from the 107s, but then it comes down to, does it bounce and break to the upside, or does it bounce and fail? So it's still not. Then we get to the 30-day, and this is where it becomes a little bit of a mixed bag. The 30-day might create a hold level to send the price up, but it's also going to create a topside range trend. And these are the types of range trends that quite often generate big rejections, especially when they're so far down from the hold level. So if this does close up for the day, you could actually see a move that ranges 13% on Bitcoin. Quite a big move, and that would take everything up to that 127 area. But I'd be really bearish if that thing goes up first, because if that goes up and takes all of that liquidity to 127 and has the hold level down here, then the target becomes the hold level, in which case it would probably come all the way back down to that 112. So the bullish case is it hits the hold level first and then travels up. But either way, there will be confluence of a prior broken trend plus a new topside range trend for rejection sitting at 127.1 after today. So as for the other levels, we are closing underneath both of these interior, or the exterior and interior trend again. So we may never even get there. But if we do, exactly like what the daily just did, where we went up for the day, but towards the end of the day, we pulled all the way back down. Well, this is a 30-day candle. If the 30-day candle pushes through all of this to the upside, within the next 30 days, expect it to come all the way back down through it. And that could be it. So we are hard closing that interior there. So it's also possible that it just rolls over, comes back down, tests that interior at 104. And then if it does that, it all comes down to then how does it react, and does it go back up again, or does it create a hold level on the underside of this candle? Oh, there you go, we're dumping. Or does it create a hold level on the underside of this candle and then continue, to then reject to the downside, and so on and so forth. Oh yeah, they're really going to town on these closes. Okay, it can still go back up for the end of the day, but I think we're expecting to hit 194 anyway at some point on SOL. Okay, now this is an interesting time frame. Okay, so this is range creation. theory and it's very new, but it is sort of saying that before the end of the cycle, we probably should see 132. That's all that's saying. We've got a hold level down here. The wick has been tested. The body might support the price. We're not losing the trends, but we're stuck under them. Could be a blow off top. Blow off top could be 132. We'll see how that goes. This needs to retest the range trend at some point. That's going to be down here at about 79. It also failed to accumulate back to this trend here. It didn't quite touch it. That's another sign of polarity. So that level itself is probably going to be a stronger rejection level now, and that's about 128. So based on that last time frame, maybe we push through to 132, but that's a push through a polarized level of 138. Sorry, 238. Sorry, 138. Had it right the first time, which then creates a full-on rejection back to 100K. That's an untested prior broken trend there at 100K, and you got your range trend confluence, etc. down here at 80K. So yeah, I think the summary of it is that the low time frame seems to be holding things up, but the high time frame looks nasty. It's really ready to have another one of those events. Okay, get a support trend will come in here today, like that. A touch of that support trend could initiate that final bounce. So that would be 109. So maybe at 109 we do then get a final push from there. The price is on the wrong side of everything, so once again it'll be pushing up through resistance, and then somewhere in that time frame it's probably going to come back down. Let's see if we've got any confluence here with any levels. No, not really, but it's closing under 121, which means 121 is probably going to have some form of rejection in the future. Not hard closed. At this stage, just a sweep of trend. But could it bounce when it touches that on the next candle? Yes, it could. Yeah. Failing that, sub 100K. Okay. The story on this one will change a little bit if we do close over 116.628 for the day, in which case we'd be in this range of price up here. But as it currently stands, a rejection from 116 could send us sub 100K. Right. Whew, I need a drink of water. Let's look at SOL. Right, so on the daily, much like the market cap, much like everything else yesterday, you see how it closed slightly under that line? That pretty much says it all. We had a trend there. We had resistance that could have been flipped into support sitting there. We pushed down just under it before the end of the day, which is how they record close. Everything past that was a trap. And then as you can see, it's come back down. So that's our daily. For our daily to flip bullish, it really has to get over that line. If it stays above the break level, you might get another move off the break level. It's not hard close, so there's no guarantees. The only real hard close level here on the daily is all the way back down to 191, which would be the range trend. And other than that, you could check to see whether it's got the ability to go. Yeah, it did close yesterday over the top of that 199 level. So it does have, or is showing intentions to come up to 208. But I think like that kind of ties in with that monthly where the 208 the 208 level is the critical level for the monthly, where we need to stay under it to create distribution, and then distribution can be engulfed, and then that can create an upper range. So it's so you might get another push through to 208, but for this to become even remotely bullish, we need to get back over that 200 0.040 before the end of the day, and ideally over the trend, which means anything kind of around 201 would be okay. So we've got a little bit of short-term liquidity appearing to the upside now on BTC. So people are chasing the dump, and so that might flip the price back up before the end of the day. We've certainly got a couple hours to go, so it can happen. Okay, got to be over 199.2 for that to be bullish. However, staying over 196.184 isn't bad either, as long as we're over it. And we've got hard close levels down there at 190.8, so that's still support. Not much else is changing there. There's a range trend just sitting there to surprise reject us back at 204 again, because that's fun. We like rejecting 204. The 3-day is totally played out, so all the levels got hit on the 3-day apart from the topside trend. We are hard closing the 188 and 187 levels, so that's positive. If we dip back to those, we should hopefully find some kind of support. Okay, 4-day's not bad. So the 4-day has done the prior broken trend retest, it's done the range trend retest. If it can stay over 197.1, then it's back inside this range. And that could give it another push back up into that area a second time. So we are going to shift a trend, and the wick is probably too long, really, to be fair. So it could reject from 201. It could reject even lower, really, 200s. It's going to be in that little wedge there, or it could go all trappy, and like it did on the daily, where it opens in a position under the resistance and it pushes up for a period of time to get people all hopeful, and then it pulls back in the next 4 days. So it could go either way, but key levels really there are, if you're buying, pretty much it depends where it closes. Obviously, if it closes under 196, then it's pretty bad, but what it means is if we get that 5-day rejection back down to 194, but if it starts tomorrow, then buying down there at anywhere in the target of the rejection in the next 4 days should bring it back up into profit, unless it closes again, completely flips and closes again under that 190.8 level. So it's like anything. If you're going to take a swing position on something like this, and you'd look at, say, your overall trend like that, if you're buying in here, it's quite risky, like just simply because if it ends up closing under the halfway mark, then you're probably not going to get back up out of there so easy. So you want to buy as low as you can, obviously, if you're taking swings on multi-day time frames. But the bull case, of course, is it closes here, it bounces off 197 and it goes up, pushes through the trend, tricks a bunch of people, gets some longs in, pulls back to the trend, and then those people will get stopped out, liquidated, or get scared, close positions. It stays over the trend, bounces on the trend, and goes up again. So that's the kind of stuff that they do. So, this has hit, yeah, so the 5-day has gone through, hit all its targets. So the level here, it's similar. It's that 197 level. Don't really want to be closing back under the wick of that candle. You want to stay above that. To be really bullish, it's got to close much higher. It's like most of the higher time frames, they need to close over 204 or 205 if they're actually going to be bullish. Okay, so 6-day might create a hold level as long as it stays above 194. So the 5-day target kind of pushes it into the 6-day hold level. So you down into that and then up from that is a possibility. To get more bullish, it needs to just get back up above these that sort of 199.2 area. To be really bullish, it's got to be above the 205. Everything's pretty much got to be. We need to start closing over 204, 205. And could this do it? Maybe. It's Let's see what this has done. Yeah, maybe. Could do it. So it's rejected off that already. It's gone down here. It's created a new trend. Failed to distribute back to the trend. The support down here in the 170s is getting stronger and stronger. But yeah, it doesn't mean much if we can't get over that. Okay, rejecting 204. Surprise, surprise. Need to stay over 188. Stuck between two trends. Fun place to be. Gonna get a downtrend created on this today to find where that's coming from. That's an anchor point, so it's gonna be there. But as long as it doesn't go down much further, it can open the next one on the top side of that, so that's not so bad. Definitely expect rejection at that 214, so that's interesting. The high time frame advanced hold levels are pointing to 214. We've got rejection on the 12-day hold level there at 214, so that's interesting. And we're going to get another interior trend here. So that's quite trappy. If it closes at that level, it could push up through there to meet some of those obligations and then pull back down again. Body of that candle is roughly 214. Yeah. Expect something to happen when we get to 214. And that's if we get above 204. It's actually even more trappy when you think about it, because if you come from the underside of 204 and then you reject off 214, you're almost certainly going to end up back under 204. It might just take time. If it can hold it and not get back under there over that long period of time for the size of whatever those candles are that come from the underside, then it's good. But 20-day, we're back under 204. We don't want to be under 204. So that's where we're at. Although we are above, what's that level? 188. So if it does do a dump to 188, 188 back to 204 might be a trade, but there's a lot of trends and stuff in the way there, so it's going to open on the wrong side of all of those trends. So that's risky. It's a risky swing. And it can't convert these 170s to better support for another 20 days. Okay, what have we got here? We've got a hold level. So we might get a bearish hold level here at 206.253, so that's not good. And we're closing back under the origin level of 209.988. Yeah, this is what I mean by it's hard to be bearish. Sorry, it's hard to be bullish on this right now. Some of this stuff is big nasty, big nasty. We've got a new range trend that will get created today, which is down here at 148. The minimum fib target for that hold level is down here at 177. If the trend doesn't break the hold level, then 164, 149 is going down, like if it doesn't. And that's all you can say about that. Yep, back under 204. 30-day, it's 30-day candle under 204. If we go up above 204 in the next 30 days, we can still pull back down underneath it, just as this one did. So this candle went all the way up to 237. And then by the time we get to the end of the 30-day candle, look where we are. So the next one's no different. If it gets up there, it can still come all the way back down here. So this is pretty. We're also confirming 241 as high time frame resistance. And if you've watched the last week of videos, this was, we had, I think it was 264, 253, 247, 244, now 241. So the resistance on the higher time frame is creeping down and down and down and down and down, making it harder for price to really have any realistic sustainable move to the upside at this stage. So that's looking a little bearish. Get a new range trend in here. Normal trend, same. It's a close above, but not a hard close of the 188.7 level. So 188.7 could trigger a blow-off type move, like it did previously. This close, which was a much more convincing close, just above that candle bounced and then came back down once it hit the high time frame resistance. So we could see a similar thing happen. We could come back down to the 180s and have a final bounce. So this time frame has got a target pointing to 214, but just bear in mind it's got a target pointing to 112 as well. So both of these are low risk moves and have a high probability of playing out over time. Okay. Yeah, that's just also saying it's like Gandalf in the Lord of the Rings. You shall not pass. So didn't let us get past 204. A little bit more bearish if it closes under 199.627 as well. That could be bad. And then any kind of move up, you'd have to take it with a grain of salt that it could just be a fake move. It does have a trend to retest up around that 275. So, you could get a blow off top even as high as 275. But somewhere in that next 60 days, guess where it's coming back to? Most likely under here. So, what else we got? So this 209 level, yeah, that could be. So the trend's going to move to here. Anything above 209, as soon as you get above there, you're potentially looking. In fact, we could even be doing this right now. Rejection back to, the 150 area based on that new trend closing today. But it might go hit it one more time first just to actually trigger it, because the trend technically does not exist today. It exists tomorrow. So it might go up one more time and then come back down. Or because it's 75 days, it might just go travel up. In fact, this is this level here at 259.8. We spoke about this yesterday, but this is another time frame that is now reinforcing 259.8 as high time frame rejection. So if we start underneath 209 and we push all the way up to that, it's probably going to be a epic dump, and that'll come back down to the trend. So that it's a little bit bearish. And this is closing underneath the range trend. So it pushed all the way through it, came back down. Rejection off the range trend around 202, 203, possible. And ultimately the high time frame support for this is 109. So it's pretty low. It may hit the normal trend, because it is. Actually, it's hard closing the normal trend today. So it could do this. It's kind of another reason to revisit the top, or the 253 top. But it's also a reason to revisit the 160s. So when we shift that trend from top to bottom, if it goes up, it's just literally a trap, because it'll be pushing through all of that resistance to hit that. And if it hit that, it'll end up coming back down to retest that at some point. So yeah, if it goes down first, maybe retesting if you ever go down first, you're taking the liquidity, you're retesting the bottom side, you've got a better chance of actually sustainably going up. But at this stage, it's a bit, yep, that's what that one is. And then we've got our hope. We do keep closing over the top of this 189 level. And every time we close over the top of that 189 level on a high time frame, we are creating another structural move to take us to 247. The issue is, do we get to 247? Because we keep on producing other types of resistance, which is now crept down below 247. So I think this will play out. It's just a case of when. This time frame is so perfect. The trend is on the underside. There's no backside of trend to stop us. The only thing really is that we are above the normal trend, or the normal downtrend. But that's okay because hold levels break downtrends. So having a hold level here and downtrend that's lower than the hold level almost gives us 100% probability of breaking the downtrend. But I just don't know why this has not happened yet. So this exists probably on 20 plus time frames, and it just hasn't happened yet. So I guess maybe it's coming. All right. What else we got going on weekly? Nothing. Let's have a quick look at Tesla. That little Tesla experiment from yesterday. So just before we look at that experiment, I'm still trying to find the best way to actually chart Tesla, because it's very hard with all these candles displaced and things, but it looks like it's going to create a hold level. The move that happened yesterday was pretty much this whole level here got dived, and then when the candle opened, it opened up above the prior broken trend as support, and then it tested the so the prior broken downtrend it opened above, and then it tested the prior broken uptrend, so as resistance. So it's those little dotted lines coming through there are your prior trends. So it pretty much just moved, from one to the other. So the thing that we know about this stuff is it moves exactly the same as crypto. It's just harder to get your exact levels, because I guess you have to wait for the day to open. So the experiment was to try and find a way, now that you can get tokenized stocks on chain, and whether you can chart them differently. And what we said yesterday was this is probably going to go to 152, and if it does, then sorry, 452. Geez, probably just scared a bunch of Tesla holders. Trying to find it now. Not that one. We've got so many tabs open at the moment, you can't see what they actually are. Oh, here we go. Right, cool. So yeah, there we go. So target hit. So this was basically just a weekly fib trade. When we looked at it yesterday, it had entered the candle, and of course the week was closed. And so the comment I made is it would be very interesting to see if the week opens and then goes back up to this level, which it has. So from a weekly perspective, what will be interesting is that if next week we close above this level, then what might end up happening is a test of something in here, maybe the whole candle, maybe the wick of the whole candle. It may just even bounce straight off the top side of the 1618 and then come up here to hit the break level at 477, or up here at the next stage of the fib level at 488. So about, I think it's about 40% of the time it'll hit this level, just roughly. So it'd be interesting to see how this. I'm not trading this, just to be completely open, but I am interested in trading it because everybody in the community seems to be either holders or trading it, and it seems to be volatile enough to make some money. So at the end of the day, if we can, then we might as well, but I'd like to figure it out a little bit more first. But yeah, so if this just does the next one, and these are high risk trades, it would be coming back into this whole candle, maybe these trends, and then bouncing back again to double top that level. If it closes the week over 453.29, it's probably going to target that break, which would be the level 2. And if this candle is the one that's actually controlling the move, then it's going to work over that and hit that anyway, if it closes over the 452.13. So those are just the things to watch. on there, but we'll have a look at that again closer to the end of the week and see if we can crack the code on how Tesla moves, and then if people do want to trade it rather than just hold it, then we'll have options. So that's it. Cool. If you've managed to get through the whole thing, like and subscribe and all that kind of stuff, and we'll catch you again later. Cheers. Bye.